Well, we're going to start with our guest. He is waiting for us in the wings.
Thinks I'm losing it.
Mr. Dan Varroney.
Hi, Dan.
He is the CEO and founder of Potomac Core.
Listen, Dan, my philosophy in life is if you're not early, you're late. And today I really messed up. Would I get a failing grade like the economy?
He's shaking his head, yes.
You can tell me. Be honest, Dan. Go ahead, grade it. Grade it.
And you know what I can tell you is that I live in the Washington, D.C. area, which is 10 square miles surrounded by reality. So
I like that. I like that. Thank you. Good morning to you.
Likewise.
Dan, let's jump right in. Thank you for having, or thank you for coming.
Good afternoon to you.
Let's jump right into it because this is a big topic. We always are talking about the economy and trying to kind of get a barometer of how we're doing. So let's just kind of start with how you think the economy is chugging along now that we're, 3 months into the new year.
So, fabulous question. Let me tell you, I'm going to give you a take on the pre-Iran war and then the Iran war. That way it'll be more digestible. So as we came into the new year, a couple of really good things happened. One of which is that a result of the big, beautiful bill that wages were increased because withholding allowances were reduced. That gave workers more money in their paychecks. The other good news thing that happened this year is that there were and are, as we speak, income tax refunds from the federal government that are generous. They're averaging around $3,500 to $3,800. One of our children got a refund of $2,900.
Wow.
So I think those two things are good news. January started with a very strong jobs number at about 130,000 new jobs, 170,000 private sector jobs. We had a blip the following month, but what I want to share with you is good news. The ADP numbers, which reports private sector jobs, it started to show growth among small businesses a little bit in January, a lot more in February. That's very good news. The other good news I can share with you is that inflation fell down at the core level to 2.4% last month, meaning January, and then in February. So that's good news. The other good news I can give you is there's a rating called the Institute for Supply Management that measures manufacturing activity and service activity in the economy. Those numbers came out within the last week. Manufacturing is showing growth, which is excellent news. And the service sector, which is about 75% of our economy, is also showing growth. So from an economic perspective, that's good news. The other good news is that wages are up 4% year over year. And we should all be happy about that because if inflation is at 2.4% and wages are at increasing at 4%, we're in really good shape, right? So that's good news. So that was the good news, and we saw gasoline prices coming down, and then the Iran war, and now we're seeing gas prices increasing. And there's concern about that. I'm concerned about that as an economic strategist for all kinds of reasons. But I believe this is what we call a short-term price shock, and it won't be forever. My sense is that in the next 3 to 5 weeks, that the oil prices and gasoline prices will fall precipitously. But as we said today, I think nationally they're up around $3.57. So that's the bad news. We are now in another era of uncertainty, and war brings uncertainty. So that's where we are. So I try to give it to you both
okay.
points.
So you're saying inflation is down, more people are working, but I guess as an everyday American, the way I gauge it is how much of my paycheck am I keeping, how much more am I spending at let's say the grocery store, or we know what's going on with the gas prices, but we go to the grocery store, just me and my husband, and we're spending the same amount we spent, I don't know, 2 years ago, a year ago, and we're getting a lot less. That's how like mortgage rates, how much a house is going to cost, how much are college, that's how, or clothes even, just like that everyday stuff is how I gauge the economy.
So I think, Anita, that's absolutely fair because you're like most of the American people. That's how they gauge the economy. But let me just tell you that Mortgage rates are down in a number of instances. I'm seeing them at below 6%, and I'm seeing home sales activity on an increase. So that's good news. And what I will also tell you that there are some food categories like eggs and milk and other products that are down, but they're still, like meat prices are way up, but that's a whole different story, right? That's a supply and demand issue. We had farmers who were literally reducing the size of their herds because they couldn't sustain them because of their cost structure. Their cost structure is the cost of feed and really a cost of regulatory compliance. So that's what happened. That's what caused the beef shortage. That's what caused beef prices to go up. And that's been something that's been going on for the last several years.
Can we back up just a couple of weeks ago? We got the latest, jobs report number, and there was a drop in that. Does that, I mean, you kind of mentioned at the top, but does that play into kind of giving a general sense of the economy, the health of the economy?
So I would call it a one-time data set. One of the things that I've learned as an economic strategist is that to not look at one number and base your assessment of the economy on just that number. To me, there isn't a Republican or Democrat way to look at numbers. The numbers are the numbers. I look for trends, short-term and long-term trends. And what I'll tell you is that the short-term trends that I saw pre-war were absolutely encouraging.
That is some good news to
Yeah, so, I mean, and the president is saying this war is not going to last long. I think it was yesterday, the day before, he said soon, it would be wrapping up soon. We don't know. We don't really know how this is going to unfold, where it's going to go. But as it is unfolding and it does continue, what are you looking at, and how, I guess, how quickly do we need to get out of this conflict to go back to the positive numbers, and how long are we in it before things get bad on our end as far as the economy?
That is an absolutely solid question. So let me give you my pre-war estimation was that we would be in excellent shape come June 30th, July 1st, in strong shape right after Labor Day, and we would look back at a great year on December 31st. What I think we've done is we've delayed what I saw as inevitable. And I think that we're looking probably mid-year to early September now at seeing an initial stronger improvement, and the end of the year for solid to impressive improvement. So I think we've just pushed it back. I by no means see a recession on the horizon. I've read different accounts, and I just don't agree with it. And I don't agree with it because consumer spending is really strong. And I'm using that data point because 70% of our economy is consumer driven. If I saw consumers really withdrawing on their spending, then I'd say, we're in serious trouble. But I'm not seeing that. I'm seeing they're continuing to spend, and I'm seeing home sales on an uptick. And I think that with the stimulus, meaning through the tax refunds, through lower withholding rates, and on average year-over-year higher pay, that we're in pretty good shape.
I like the optimism. We need that today. Thank you.
Yeah, we appreciate your time.
A lot of good positive information.
We appreciate it.
What I would say is I think that all too often, you pick up a newspaper and there's a lot of doom and gloom. And I try and look beyond the doom and gloom and look at how solid things are. And look, if they weren't solid, I would tell you. But I think going into the war, the economy was in very solid shape. Consumers are feeling pretty good because they're spending. The other thing I'll tell you is we also had a very strong Christmas spending season, and that's also good. The other good news I'll give you is that one of the precursors to hiring is the following. When you see a lot of business capital investment, as we saw throughout the year, especially in the fourth quarter of last year, that's a very good sign. And that's usually an early sign of what will be strong hiring. So I think that's also very good news. Now, from a small business perspective, and I just want to share this with you. So my new book is called Rethinking Economic Growth. It's about the power of small business in driving our economy. And the reason why I wrote it is that I saw that the economy wasn't growing consistently. But what I learned in writing the book and interviewing 35 small business owners is that small businesses are, in fact, the economy, that 99.9% of the companies in the U.S. are small businesses. And they have made a lot of investment as a result of the 100% write-off for plants and equipment, and they're waiting for interest rates to come down. And when they do, I believe they're going to hire workers. And why I'm excited about that is because small businesses hire 2 out of 3 new private sector workers. So we should, in this conversation, be looking forward to the Federal Reserve next week. I have written 3 or 4 op-ed articles, and I've said it's time to reduce interest rates. They're a full percent too high. If they're lowered, I think small businesses will get in a big way and hire a number of workers.
Which would be amazing. How do people find you and get a hold of you, get more information?
So they can find me at danielvarroney.com, and they can find my book at amazon.com. It's called Rethinking Economic Growth, and I hope small businesses watching today will go and buy the book because they'll see 12 different industry case studies, and they'll find out how small businesses are resilient and how they're dealing with today's challenges.
Well, Dan, thank you so much.
We appreciate it.
You're welcome.
Stay warm out there.
Will do. Take good care.